Hi, everybody. Yeah, I just want to do a midweek review of some of the top stocks that we're trading right now and have positions on, and just kind of go over what we were looking at when we found these setups. First one I want to talk about is Applied Optics, and we've had a big position on this for a while in the Three Stocks to Wealth newsletter. And what we're looking for on this in the Tradetobefree.com newsletter is a higher low followed by a higher high. And we actually saw that on Friday. Broke the prior high here. I can probably zoom in on that once I get to the recording. But in here there's a high made, and then it made a higher low over here, and then broke that prior high. And that's a double bottom pattern within a very strong long-term uptrend. And that's usually a great entry point on this stock. And then once we saw it break this high over here, which was a larger high and over a longer time frame, that was more of a confirmation for us. So we featured this as our number one trading setup this week in the newsletter, the weekly alert. When you go in, you can just go to the index and you can click on the day that the stocks were featured, and then click on the ticker, and it'll bring you down to the chart and the analysis. But this stock has not only triple-digit growth, it's one of the top growth stocks in the market right now. This stock has some of the best growth fundamentals in the market right now. It has not triple-digit, but has quadruple-digit growth, over 1,000% year over year over the past 3 quarters on average. So it's got really strong growth right now, and it's got a high return on equity. The P ratio is pretty low. It's a chip stock, so eventually, oversupply will come into play, and the stock will turn over with the rest of the chip stocks, but that may not happen for a while here. One other problem that people have with the stock too, and why it's heavily shorted, is because Amazon is one of the biggest customers, and as we all know, Amazon can be a tough company to supply to, and when a large chunk of your business goes to one customer, if that customer suddenly changes its relationship with you, then that could really hurt the stock. So it's not really a one-trick pony, I would say, because it does have, I believe, Microsoft and Google and the other big data center customers. So it's not a one-trick pony, I would say, but it does have some risk there with Amazon. But will Amazon create a new company to build optical networking equipment? I'd say probably not, and they're awfully busy with other acquisitions right now and other things going on. So I don't know if this is really something they'll go after. The overall demand in the space is very, very strong in the data center, and so the stock has a really good chance of breaking through the highs and going a lot higher. And since we featured the stock on Monday, the stock has continued to break out of this double bottom pattern and gone up, close to 10%. It looks like it's breaking out again out of a 5-minute pattern on an intraday chart right now. So it's looks like it wants to test these highs, and it may just break right through there. We saw, I think it was Kohu is the name of the company, one of the first semiconductor stocks to report early numbers, and they beat handily on the top line and bottom line. I think they beat by 5-10% of the top line even. And so that's probably a good omen for the rest of the chip stocks. I saw NVIDIA is breaking out of a double bottom pattern right now today, and we also had a explosive bottoming pattern, which is a great technical setup for those who like trades that last for anywhere from an hour to a few days. But this stock hit a great entry point here. It satisfied all the rules in our explosive bottoming strategy. It's a little bit high. The price is a little bit over $60, but because the chips are leading the market and because the stock was due for a strong rebound and it has such strong fundamentals right now, and second quarter earnings are set to be pretty good the way it looks right now, with all those factors in place, I thought this would be a good bottoming trade to play, and hit a great entry point on Monday, and it looks like it's up 7-8% already in a few days. So that one continues to do pretty well too. I actually got out of this today. If I can bring up a 5-minute chart on this, I can show you. Stock hit the 50-day moving average early in the day and started pulling back sharply. So I said, you know what, I may as well just cash it in, and hoping that it would pull back from the 50-day and then have another bullish pattern, and then jump back in if it goes back above, the prior high. So, but it may continue to go further here the way it's set up. And MKSI is looking really strong right now. It's another good technology stock that has great fundamentals and is going strong right now. So, yeah, one of the great things about these plays too, and the stocks that we feature, is that we focus on these stocks that have the really strong fundamentals. I mean, if you can get a stock that's growing earnings triple digits, that's great. But when they're growing over 1,000% earnings quarter after, or year over year, I should say, and they're beating estimates, and they've got this sharply rising estimates, which when this one does, they've gone up 40% over the past 90 days. Sure, the Amazon kibosh might be put down on the stock in the days or weeks ahead, but not too likely. And we'll probably see this surge into its earnings release. It does tend to pre-announce earnings. In the past 2 times it's done this, it's had a really big upside surprise on the pre-announcement. So given the technical trend we have right now on the intermediate time frame where we're going higher, strongly higher, it'll probably react very well to strong earnings news. So if we get that, great. If it, of course, if it disappoints on a pre-announcement, or if it misses estimates, it'll go the other way, of course. But right now, this trade's acting really well. So great. And speaking of earnings, we have that earnings eruptions trade that's working really, really well right now. Kohu didn't really qualify because it's just too thinly traded, and it didn't satisfy all the criteria in the course. But that's a great trading setup for the weeks ahead, because we'll see a lot of great earnings surprises in the weeks ahead. So if you haven't yet, you want to check out that course on the site, and I'll put a link down below, and get ready for earnings season, because it could be a great earnings season. And then, it may be a great day trade, and then, a couple days later, the stocks will tend to sell off after that day trade, that very profitable day trade in most cases. And then, later in August and September, we'll see what happens in the market. But this quarter is setting up to be pretty good right now. So, but stay tuned. We'll keep tabs on the market and let you know if we see a bearish market signal in the overall market that generally precedes sharp corrections. So, all right, well, that's about it for now. Good luck in your trading, guys, and I'll talk to you again real soon.